Welcome to our session today. I am your instructor, CPA Aringo Frederick. In our class today is a continuation of what we were doing earlier on. Remember, in our previous class, we had introduced simulation analysis. And in that case, we had talked of application of simulation in business. And we mentioned the main application of simulation in business will always be talking about Monte Carlo simulation. And in Monte Carlo simulation, we had talked of the 5 main steps, which I want us to consider the 5 steps in this question that I want us to do. And again, we mentioned anytime we are dealing with simulation under inventory control, we should always recall the inventory costs. And these costs are holding cost, shortage cost, and talk of what? Ordering costs. These are the main costs that you must always have in mind. So I want us to handle this question for November 2018, question number 3. This question will give us a wider understanding when it comes to the concept of simulation analysis. And by the way, this concept is also applicable to the students who are doing QA section 4. It will benefit all of us. It will benefit all of us. It will benefit the students who are doing MA section 5 and those students who are doing QA section 4. And if you haven't probably you've not gone through our first video, kindly download the Darasa app. Go create your account, and on that case, access the first video after you've created an account. So in this case, it is as simple as that. So today, let us consider this question. For those who can access Advanced Management Accounting paper, that is November 2018, question number 3. And for those who can't, I'm going to share this question in our screen. Let us use this question to widen our knowledge of simulation analysis. So kindly take a screenshot of that question. Then when we start working out, we should be very good with that question. So this is a question. In our question, this is what we are told. November 2018, question number 3, part C. This is what we are told, my good student. This is what we are told, that Vitabu Limited stocks books for sale. The company is concerned about high inventory cost and is therefore considering reviewing its current inventory management system. Additional information, I'm given our daily demand. Daily demand is probabilistic and follows the following distribution: demand and probability. Note number 2, I'm given our lead time in days and probability. Note 3, we are told ordering cost is 1,000 shillings per order. Note 4, holding cost is 50 shillings. This should be, or it was corrected to be, holding cost is 50 shillings per unit per day, while stock out cost is 200 shillings per unit. Note 5, the policy of the company is to order 55 books whenever stocks fall below 15 books. Note 6, the opening inventory on the first day was 55 books. Note 7, the following random numbers are provided. So I'm given our random numbers here. Required, a simulation of the company's inventory balances for the period of 10 days. Number 2, the average daily inventory cost. So my good student, kindly take a screenshot of that question. Then you work it out. Okay. So this is what you must always have in mind. Whenever I'm given a question for simulation and inventory control, we should always smile. The first thing that we should do, just smile. Because if you have the concept right, it is always very simple. The concept will never change. And I am insisting on the concept. So let us master the concept right. We should not cram. Let us master the concept right. So the first thing, whenever you've seen you're dealing with simulation analysis and you have inventory control, first thing that you should do, my good student, is come and identify your inventory cost. Come and identify your inventory cost. That's the first thing that we should always do. Identify our inventory cost. Like in our question, we can clearly see I was given our holding cost. Take holding cost per unit, per day. We're given our ordering cost per order, and we are given our shortage cost per unit. So this is the first thing that you must always identify, the inventory cost given. The inventory cost given. Because if you can look at what I was given here, in note number 3, ordering cost, note 4, holding cost and shortage cost. So this is what we have. I'm having our holding cost. We are going to take holding cost given 50 shillings per unit. Ordering cost, I'm given 1,000 shillings per order. Shortage cost, we are given 200 shillings per order, or rather per unit. After we have identified our inventory cost, come and consider the steps of Monte Carlo simulation. The first step, identify the variables and their probability distribution given. How will you know the variables? The variables will always be attached with probabilities. The variables will always be attached with probabilities. Kindly mark that one. The variables will always be attached with probabilities. So, if we identify the items attached with probabilities, we can clearly see we had what? Demand. Right? And lead time. And this demand I was given what? Let me share it here. Come to note 1, my good students. Come to note 1. Come to note 1 and see the demand that I was given. Demand, we had demand attached with probability. So looking at our demand, talking of our demand, if we are all on the same page, we can clearly see I was given demand in units. So I was given 10, 14. So we can clearly say I was given 10. We are given 14. We have 18 and we have 22. Right? Probabilities given. My good student, if you can see the probabilities given, we had 0.22, 0.30, 0.40, and 0.08, 0.08. If you can clearly see what I was given there, I've shared the question there with you so that we use it together. Then come to note number 2. Note number 2, I was given lead time. I was given lead time in days. I was given lead time, and this is in days. Lead time, my good student, I was given what? You can clearly see I was given 2, 3, 4, and 5. Probability 0.1, 0.3, 0.2, and 0.4. Remember, we are analyzing that question, right? We are analyzing that question. So that is what I was given in relation to lead time and demand, having our probabilities given. Having our probabilities given, my good students, right? After we've identified our variables and their probability distribution, second step, we have to prepare our cumulative probability distribution. So this should take us to cumulative probabilities. Cumulative probabilities. Cumulative probability. And how will you prepare our cumulative probability? This is what you're going to do. I'm having 0.22. correct? Cumulative, in this case, I'm going to add 0.30 to 0.22 to give us 0.52. 0.92 and 1.00. The other cumulative probability should be having 0.1, 0.4, 0.6, and 1.0. So that is the second step, cumulative probability. Then the other step, my good student, what we need to do is to come up with our ranges or intervals. So talk of our range or intervals here. Intervals. Talk of our ranges or intervals. And how will we identify that one? This is where I need you guys to be very, very tentative. This is where I need you guys to concentrate very well. In coming up with our ranges, recall the aspect of cumulative probabilities will always guide us. And mark this correctly. I must always consider the number of decimal places that we are given. Like the first case, in demand, I'm given 2 decimal places when it comes to our probability. Therefore, our range must also be in 2 digits. If I'm given 1 decimal place, our range should be 1 digit. So come to this case, and you're going to start with our lower limit. So in this case, I'm looking at 2 decimal places, 22. So we are going to start with 002, lower limit of 22 I'm having 21. Then consider the lower limit of, in this case, of course, I should be having 22. The next range to the lower limit of 52, I should be having 51. Consider this case, 52. The lower limit of 92, I should be having 91. 92. The lower limit of 90, the lower limit of now 00, that is the same 100, I should be having 99. So that is what we need to always master and have at the back of our mind, right? Then after I'm done with that, consider the next range. At this point, under lead time, we only had 1 decimal place. Therefore, our range should also be on 1 digit. So therefore, we should be talking of 0 to the lower limit of 1, that is 0. I should be having 1. The lower limit of 4, we should be talking of 3. We should be having 4. The lower limit of 6, I should be having 5. I should be talking of 5. The lower limit of 10, I should be having 9. So that is our step number 3. We come up with our intervals, and this is the intervals that we come up with, at least that we have prepared. Now the second step is to identify the random numbers, either through computers, either we are given, either using random number tables. The beauty part with this question is that we were given these random numbers. Then the last step, we have to prepare what is known as simulation worksheet. We have to prepare what is known as simulation worksheet. So therefore, we have to prepare our simulation worksheet, meaning that I want to run the trials. Simulation worksheet. We need to prepare our simulation worksheet. We need to prepare our simulation worksheet. We need to prepare our simulation worksheet. These questions are always very simple, so long as you've mastered the concept correct. Okay, my good students? Very, very simple. So we start with our trials or run. I was given, I need to prepare this simulation for how many days? We are supposed to prepare this simulation for how many days? Let us come and share and see. Required a simulation of the company's inventory balances for a period of 10 days. For a period of 10 days. For a period of 10 days. So therefore, I'm going to have day 1, day 2, 3, 4, 5, 6, 7, 8, 9, and 10. After we have our trials, the next concept to do, because we are dealing with inventory, always consider your opening inventory. After you have your opening inventory, my good student, the next thing, consider the variable that you are given. The first variables are having our demand. And these variables will always be attached with the random numbers. So I'm having our random number. The first variable given is demand, so allow me to use D. The second variable given is lead time, so I should attach our random number on our lead time. So I'm having lead time. Then consider your closing inventory here. Consider your closing inventory. Then identify the cost that you are given. What were the costs given? The cost given, my good student, you had already identified this cost, where we had our holding cost, we had our ordering cost, we had our shortage cost. Then we can consider our total cost. We can consider our total cost at that point. Now, the moment I have this sheet, and by the way, if you are looking or if you are dealing with any question for simulation, the moment you have this, you are good to go and you've understood the concept right. Because the next thing that you are going to do is to identify the opening inventory given. How many units are we given as our opening inventory in our question? We were given, look at that case, note number 6. Look at note number 6, my good students. Look at note number 6. Note 6, we are told the opening inventory of the first day was 55 units. The opening inventory of the first day was 55 units. So that is what you are going to consider as our opening inventory. Always have that in mind. So I'm having our opening inventory to be 55 units. So that is what we are going to take under our opening inventory. So kindly have that opening inventory. Have that opening inventory of 55 units So we should be having this case. I'm going to take 55 units there. So our opening inventory is 55 units. So I'm going to have our 55 units there. Then the next step that we should do is what? Consider our first variable, which in this case it was demand. What is the random number that you are going to take? Remember, for the first variable I had 2 digits. Therefore, the random number to select, it should be 2 digits. So looking at our question here, we should be having the first, note 7, the following random numbers are provided. So I'm having 94. So that is what we are going to take as our first random number. So we are going to take 94 here. I'm going to take 94. Having our 94, look at this case and be very tentative on this. Random number is 94. Come to your demand. Identify where your 94 will fall. So I can clearly see my 94 will fall in between 92 and 99 to give us a demand of 22 units. So therefore, my demand is 22 units. If we had 55 as at the beginning, then our demand during the period was 22, so it will be our balance, 55 minus 22, to give us 33 units here. I've not reached our reorder quantity, because reorder quantity, you are told anytime that I'll make an order if we fall below 15 units. If we fall below 15 units, that is when I'll be required to make an order. So our closing inventory is not below 15 units. So therefore, we should be talking of 33 as our closing inventory. Then what are we being charged in maintaining this inventory per unit? In maintaining the inventory per unit, you are charged 50 shillings. So you should be having 33 by 50. That should give us 1,650. 1,650. So we are done with that case. Considering our opening inventory on day 2, we should be having 33 units. The next random number, my good student, I should be having what? If you can clearly see in your question, maybe let me share for the last time, because you have the question right. After 94, you can clearly see we have what? 56, right? So 94 not 7, that is not 7. I'm having 94 then 56. So we should be having 56 here. And look at our demand. Where will 56 fall? 56 will fall at 18, right? So 56 is falling in between 52 and 91, and that should give us a demand of 18 units. So I'm having 18 units. So therefore, what will be our balance as at the end of the day? I should be having 33 minus 18 to give us 15 units. Are we below 15 units? We are not below 15 units. You are not below 15 units, because you are told I'm only going to consider that if we fall below 15 units. In our case, I'm not below 15 units because you are at 15 exactly. So I won't order. So that should give us 15 by 50. That is our holding cost per unit to give us 750. So I should be talking of 750 there. My opening inventory should be our closing inventory on the second day, which in this case I should be having 15. Consider the next random number. The next random number given there, my good student, I can clearly see after 56, I'm having 24. And at 24 being our random number, 24 will fall in between 22 and 51, which in that case should give us a demand of 14 units. So I'm going to have 14 units. In that case, what will be our closing inventory? I'm seeing I'm having 1. So therefore, I need to make an order. And ordering cost, we had 1,000 per order. We had 1,000 per order. And holding cost, I'm having 1 unit. And maintaining or holding cost per unit, I was given 50 shillings per unit. And I'm only having 1 unit. So therefore, should give us what? 50. Now, when we've made an order, I know very well that there should be, I'm going to have that waiting time. We are going to have that waiting time, duration of waiting. And that is what you're timing it as lead time. Remember, lead time was our variable. Being our variable, I need to give it a random number. And this variable had only 1 digit. So identifying our random number, we must also take what? 1 digit. So come to our question here. Come to our question here. After 24, we have what? After 24, I can clearly see I'm having 0 because I'm taking a single digit. So therefore, we should be having what? We should be having 0. So I'm going to have 0 being our random number. And at 0 being our lead time, where will 0 fall in our range? 0 will fall in between 0 and 0 to give us a lead time of how many days? 2 days. So therefore, at this point, lead time, I'm having 2 days. Meaning that after we've ordered for these goods, I'm going to receive them after 2 days. And that will be when? I should be having day 1 when we made an order and day 2. So therefore, I'm going to receive the goods on day 5. We are going to receive these goods on day 5. So be very keen with that. So after we are done with that, my good students, come identify our total cost here. The 3, my total cost should be 1,050. 1,050. Then the 4 opening inventory is 1 unit. The next random number to consider after 0, you can clearly see we had, that is 0, I'm having 64. So we have 64. Where will 64 fall? 64 come to our range here. 64, where will it fall? It will fall in between 52 and 91. To give us how many units? To give us 18 units. So look at this case. My demand is 18 units. Available is what? Available is 1 unit. So therefore, I should be having a shortage of how many units? I should be having a shortage of 17 units. And shortage cost per unit in that case, my good students, we are given what? We are given a shortage cost per unit to be 200. So therefore, at this point, as at the end of that day, this is 1 and 2, right? As at the end of that day, I won't be having anything. I'll be having 0. I'll be having 0. I'll be having 0 as at the end of that day. As at the end of that day, I'll be having 0. I'll be having 0. Now, after we have that case, meaning that I won't be having our holding cost, I won't be having our ordering cost, but I'll be having a shortage cost. Because my demand was 18 and I only had 1 unit. Our shortage units is 17. And shortage cost per unit, I was given a figure of 200. To give us a total of 3,400. 3,400. Correct? Consider day 5. What will we be having? Day 5, we are receiving our goods. Because we made an order in day 3, which in that case I was to receive these goods after 2 days. So day 1 elapsed, day 2 elapsed. So when it comes to the 5th day, I'll be receiving these goods. And the goods that I'll be receiving, I should be talking of 55 units. Remember, the reorder quantity given, that was according to note, sharing this note. Note number 6, note number 5. The policy of the company is to order 55 books whenever stocks fall below 15 books. So that's why our reorder quantity is 55. So therefore, I should be having 55 units being our inventory. The next random number to consider, my good student, I should be talking of a random number of, after 64, I can clearly see I'm having 23. Random number 23, where will it fall? My 23 will fall between 22 and 51 to give us 14 units. So after my inventory, the balance I had 55, we've sold 14 units. So therefore, I should be talking of 41 units being available in store. 41 units. And each unit, I'm maintaining that at 50 shillings to give us 2,050. I don't have ordering cost. I don't have shortage cost. I'm having 2,050. So considering the next day, day 6, I'm having 41 units being our closing inventory. For day 5 will be our opening inventory in day 6. Random number to consider will be what? After 24, we can clearly see after 24, after 23, the next random number I'm having is 94. And where will 94 falls? 94 will fall here, between 92 and 99 to give us 22 units being our demand. And we had inventory in store, we had 41 units. So 41 minus 22, that will left me with 19 units. So I will not fall below 15. So therefore, by 50, holding cost to give us 950, I don't have ordering, I don't have shortage. My total cost I should be having 950. Correct? Then day 7, our closing inventory should be opening inventory in day 7, right? Which in this case is 19. Consider the next random number. The next random number after 94, for those probably who are joining us right now, this was our question. Random numbers, I can clearly see we had, of course, after 94, I'm having 79. So you're going to take 79 there. So you're going to take 79. 79, demand at that point come to whatever that we had prepared in our range. 79 will fall in between 52 and 81 to give us 18 units, right? Meaning that as at the end of that day, I'll only be having 1 unit in store. So therefore, I need to make an order of 1,000 units, of 1,000 shillings per order. So what will be our cost? Only cost, I should be having 50. Because you are making an order, I must wait for these goods to be delivered. And this should take us how many days? This is where you are going to consider the random number, the next random number, because our lead time was a variable. So the next random number after 79, you can clearly see we had what? We had 5. Come to our lead time schedule. Look at where 5 will fall. 5 will fall between 4 and 5 to give us 4 days. So I'm going to receive these goods that we are ordering on 7th after 4 days. So we are going to receive them after 4 days. Day 1, day 2, day 3, day 4. So if I was having the 11th day, I will receive them on the 11th day. I'll receive these goods on the 11th day. So clearing this, my total cost, we should be talking of 1050 there. Opening inventory is 1. The next random number to consider after 5, I'm having 52. I'm having 52. We can clearly see, we have that question now. Because we're just following our random numbers. After 5, I'm having the next random number to consider is 52 because of demand being a double digit. So 52 will fall in between where? Will fall in between here, right? And at that demand level, I'm having 18 units. So therefore, I should be talking of 18. Remember, in store, we only had 1 unit. My demand is 18, I'm only having 1 unit. So therefore, as at the end of the day, yes, I'll be having 0 as closing inventory. Our holding cost, I don't have because we don't have anything to maintain. Ordering cost, still I don't have. But shortage cost, I'm having a shortage cost of 17 units. My demand is 18, I'm only having 1 unit in store. So I'll be having a shortage cost of 17. So you take that 17, you multiply by the shortage cost per unit, which was 200. That should give us 3,400. 3,400. Correct? Consider the next day. Day 9, I don't have anything in inventory. Day 9, we don't have anything in inventory. So therefore, what will be a random number after 52? We can clearly see my next random number is 23. Right? I'm having 23. And where will 23 fall? 23, I should be having it in between 22 and 51 to give us how many units? 14 units. But the question, my good student, is, do we have anything in store? We don't have anything in store. So I don't have anything in store. So I don't have any holding cost. I don't have any ordering cost. But my shortage will be how many units? My shortage, my good students, we should be talking of how many units? Our shortage, we can clearly see that my shortage, I should be talking of the whole 14 units. So just a moment. our shortage, we should be talking of a shortage of 14 units. So take your shortage cost per unit by the number of units given, by the number, or rather the shortage cost per unit by the number of units. So this is what we should be having. Sorry, I was on the dark. Okay, now I'm back. So therefore we should be talking of 14 being our demand times our shortage cost per unit, which was 200. I should be talking of 2,800 here. 2,800. Correct? The next element, the 10, I don't have anything. The next random number to consider, you can clearly see we had what? 70, right? And at 70, where will it fall? Between 92 and between 52 and 91. To give us 18 units. To give us 18 units. To give us 18 units. So I should be having 18. Still, I don't have anything in store. I should be talking of 18 units here. So you should be talking of 18 being our shortage. We multiply by the shortage cost per unit, which is 200. So by 200, that should give us 3,600, 3,600. So, my good students, this is our simulation worksheet. And what the examiner wanted us to determine on the first case. Then recall, on the same question you were asked to give the average daily cost. Average daily cost. Looking at our average daily cost, we need to determine our total cost here. And if we sum up our total cost, we should be having 750, 1050, 3400, 2050, 950, 1050, 3400, 2800, and 3600. I'm summing up all to give me 20,700. So therefore, our average daily cost, I should be having the total cost of 20,700. We divide by the number of days given. In our case, number of days given was given 10 days, right? Being 10 days. So therefore, our average daily cost, we should be talking of how much? 2,070. 2,070. And that is what you are required to do in that question. So that in our next class, we are going to look at another question for simulation analysis. Which, if we have the two questions, trust you me, there's no point that you will ever probably find simulation to be a challenge. So long as you've gone through our first video, then this question, then the next question that we're going to do, you'll be very good in simulation. So thank you so much, and let us meet in the next session. Thank you.